Morning all, how are we all doing? Morning David. Another week. How's everybody's weekend? Do anything exciting? I did absolutely nothing this weekend. Well, I didn't actually, did a few bits and pieces, but nothing exciting. Bit of rain, bit of thunderstorm, bit of sun. Very weird. Actually, no, I did do something cool this weekend. I went to a car show at Goodwood, which was good. Players car show, always good fun. Right, so this week back to position trading. So I've got my VPS all set up, ready to go, funded account. So yeah, I'm just going to get back into some more positions from this week onwards. Today's going to be possibly quite light because obviously it's a holiday in the US today. It's Juneteenth Day, whatever that is. Morning Alan, never heard of it. I don't even know what Juneteenth Day is, if anybody knows. Yeah, probably light liquidity today. Morning Kennelly. So this week we've got obviously holiday today. It's PMIs and CPIs this week. We've got Lagarde speaking this afternoon, twice, and Bullard. There's obviously something going on. Economic Monetary Affairs in Brussels. So there's, I would imagine that's the same thing. Yeah. So, excuse me. So we've got talking heads today, this afternoon. Apart from that, there's no scheduled news. 1 o'clock, excuse me, still got this COVID hangover going on at the moment. 1 o'clock tomorrow morning, we've got Lowe speaking. And monetary policy meeting minutes tomorrow morning for the Aussie, so we might get a bit of volatility off the Aussie, but probably not too much. We got retail sales for the CAD tomorrow, home sales for the US, which is not particularly exciting. First main news event of the week is CPI on Wednesday for the pound. That will be very interesting to see what happens there. We're forecast at 9.1. I get the feeling this is probably going to go higher, but we will see. So we've got 9.1 forecast on that. We've also got the CPI forecast for the CAD, which is out in the afternoon. That's possibly going to go up as well. CAD's, all the CPIs seem to be higher than expected, and forecasts keep changing to be higher than expected as well. So it's really running away, inflation. So watch these figures. We could get some negative impact on both of these on Wednesday. Morning, Stevie. So that's the main news to kickstart the week on Wednesday. So potentially a very light day today. I'll put the crickets on. We'll see what we get at the open. But I'm not expecting a massive amount of volume today because it's a US holiday. There's two things happen basically when you get a holiday. Either when it's a bank holiday in the UK or a bank holiday in the US, you get one of two things happening. The most common is we get a very light liquidity day and very light trading, so you tend to get a range on most things. So you do get movement, but it tends to be a kind of rotational day, so it's good for picking tops and bottoms. Or you get one of the banks decide to actually go crazy and move the market massively. So we either get massive ADR days or we get nothing. And the reason we get the massive ADR days is because there's light liquidity in the market, because one of the main market participants isn't there. You get huge slippage and massive moves on light liquidity. So one or the other. But obviously you don't know until it happens. So but most of the time it tends to be fairly subdued, so we'll see what happens today. We got Powell testifying tomorrow afternoon as well. Wednesday afternoon. Then over to the European PMIs. So we got Euro ones are at 830. The rest of them kind of can ignore. So the European ones, the aggregate basically is the one that is the important one. We've got services and manufacturing for the US in the afternoon, and then Powell talking again. Bank holiday New Zealand. And then we've got Lowe speaking on Friday. No other news really on Friday. We've got retail sales for the pound. That might well have some impact, but it's not going to be good. So I suspect this week we're going to have negative pound twice this week. The PMI figures, if they come out negative as well, that'll all be the same. So pound, I think this week, good for shorts. So there's our news recap. So there's a few bits and pieces in there. It's a pretty normal news week, nothing particularly exciting, nothing massive going on at the moment this week. So a little bit of liquidity coming in at the open. We've had a big pre-market run up this morning. Yeah, it's fairly light. Market's opened. Very, very light price action at the moment. Tight opening range. So quickly cover the indexes to start with. Then we're going to go through all the FX pairs, have a look at where we are, see if there's any opportunities to get into anything. Nasdaq, we had that big down day. We broke new lows last week. We're in a bit of a pullback at the moment. We've got this little gap from Monday. So this is Monday last week. We've got this little gap which we didn't manage to get filled, which is looming over us at the moment. We had one here as well, which didn't quite get filled, and as you can see, that took sort of a few weeks to get back up there after a little bit of a pullback and a drop. A little bit of buying coming in, so it looks like they're heading up this morning at the moment. So we've got this gap fill looming over us at the moment. Obviously the market is massively bearish. All the indices are still massively bearish. We had that huge sell-off week before last. We haven't done any kind of profit take or recovery on that, and then they've dropped back down and made another new low. Obviously there's not going to be any liquidity this afternoon, because obviously the markets aren't opening 2:30 this afternoon. So it's difficult to tell what we're going to get today, but there is a good chance this week we may well push up and try and get that done. Alternatively, we're just going to carry on our merry way and leave it behind. The way the speed of the market movement, like the week before last, I wouldn't be surprised if we just continue straight down. We've got plenty of room to go still, obviously down to the expected sort of levels, but who knows. S&P pretty much the same thing. Big drop down, very little. We had a doji sort of put in on Friday, so very little movement there. But obviously dojis are, they happen before typically we get a reversal, so it's a potentially bullish sign that we are going to start to get some kind of movement back up again. Whether or not they can come back up and get these fills done, it's very difficult to tell at the moment. Same with the Dow. We've got the gap. We had a rest on Friday, so potentially today could be an up day, but we will see. Big drop on the FTSE, and FTSE's tried to recover on Friday, didn't manage it. A little bit of a push up today. Same with the DAX. We're having a little bit of a push this morning, although there's a load of sellers now starting to step in. So very difficult, mixed bag with the indices at the moment. Wow. Obviously a lot more weight of selling. We've seen sellers and buyers coming in at the open. Seems to be an awful lot more weight of sellers there at the moment. So potentially looking good for shorts. We've come back up into this gap fill. We are finding sellers up here. This is where we reached for pre-market, so we could well just go straight out the gates today. Remember today, obviously, we may have light liquidity across everything. So if there is light liquidity and they do want to put some big orders in, we're going to get a lot more movement than normal. So we could have an easy ADR today. We'll see. So yeah, so that's the indices. I didn't trade much last week. I'm trying to trade the afternoons at the moment, and obviously there's no afternoon trading this afternoon, so just there's so much more liquidity. I can get rid of that alert now, don't need that. So there's your indices. Oil as well, expected, we're looking for a 150 forecast on oil now over the next 12 months, so we should be looking for buy opportunities on oil. We just pulled back nicely into the 72 again, and good rejection on Friday. This morning we've tested it and rejected it as well. So any of you trading oil, it's obviously a long at the moment, oil, and it will continue to be so. It's all going to depend on output for barrels. So every Wednesday we get the oil figures. But yeah, very nice pullback going on at the moment. We're looking to come up and retest initially this 126 level. So yeah, perfect buy opportunity, perfect spot to start looking at buying oil down there. We're nicely extended on the 4 hour. We've had some decent sell off on Friday. So it's cheap. People buy cheap. So it's looking pretty good. We've had a good declining week on oil, so it's ready for next leg up. It's pretty, at the moment oil is pretty rhythmic. Yeah, so that's the sort of price movement we should be looking for. Market structure is very clean at the moment. Not quite so clean there, but there's our low. So this is where we would look for next leg up on oil. So good area to start buying that if you're interested in oil. Bitcoin collapsed. Still collapsing. Bitcoin is doing worse than the indices at the moment. Sorry, I have to snigger. It's just because I don't trade crypto. We've got a much bigger gap on crypto to aim for. But yeah, crypto's falling out of bed and it doesn't seem to be able to put a green day in at the moment. So if you are trading crypto or you're holding crypto, I'd get out. I suspect we're coming back down to 5,000 to be honest on this. I don't think I've got enough data. I haven't got enough data. But yeah, back down to where we started, I would imagine. We will see. And gold, can cover gold on the other platform. Actually, no, I must do it on here. Gold, basically, we are still in that sideways accumulation at the minute. So we had this low put in. Where's March gone? Let's zoom out a little bit. So obviously we had the run up on the war. And then that accumulation, we pulled back down, back into this area of balance, which we've tested and we've tested again. So at the moment, I think we're going to get some continuation upside on gold, but we're not going to get very far. So I think we're probably going to go more into a kind of holding pattern on this. It's going to be very dependent on what happens with the US dollar. And the US dollar is kind of a little bit neutral to strong, I think, on the US dollar. So we should see a little bit of movement up on gold, because gold will always try to appreciate, but then battered back down again by the US dollar, push up, battered back down by the US dollar. So neutral to sort of a little bullish, I would say, on it, just because the US dollar I don't think is going to be anywhere near as strong as we were expecting it to. So I think gold's probably got a chance of sort of trying to push in this upward channel. I don't trade it personally, as you know, but it's very difficult. I would be looking more range-bound opportunities on it really, but with a slightly bullish bias. It is bearish at the moment, but I don't think they're going to want to take it down. This is the fair value for gold at the moment. Yeah, we're skirting on the highs after a run up. So this is kind of where I would be expecting us to kind of try and get some traction from. So that's hence the slightly bullish view on it. But really it's going to be dependent on that and what happens over the next sort of few weeks with our friend the US dollar. Right, crickets. Let me just turn the crickets down a little bit. There's a lot of selling coming in this morning. So we're going short at the moment. I've not seen any buyers at all so far. We're just coming down into potential support on the 50 and pre-market. No buyers though. Right. FX. Let's move those out of the way for a minute. Oh, we've opened two. Oh, that's interesting. I didn't know you could do that. I've opened two tick strikes. I'm going to turn it off for a minute actually. We don't need it for the minute. Morning, Jesse. Oh yeah, just as a side note, anybody see that video released by CTI yesterday about their new strategy, or one of their strategies they're doing? They've got this new thing. CTI is a prop firm, if you're not familiar with them. They've got this new thing to do with quants that they are pushing at the moment. I'm not 100% sure exactly what it is, but it's a load of strategies they've automated, which you can basically buy into the portfolio of, it seems to be. And you can run your prop account on it. I'm not 100% sure on it. But they released a video with a new strategy, which they claim has got 70% strike rate on certain instruments, and absolutely amazing. Did anybody see it? I don't know if anybody's on CTI's list, basically. But I looked at this strategy that they were explaining, and they showed the settings for the indicator. So basically what they're doing is they're selling this indicator for $500. $500 for an indicator, yeah. That's what I thought. So I looked at the indicator and they showed the settings of the indicator on MT4, and the only settings for this indicator were ATR and ATR multiplier. So I thought, well, it's obviously an ATR based indicator. So I looked at what it was doing on the screen, and basically all it does is it draws dots below price until it breaks it, and then it moves the dots above it. Yeah, so dots would be kind of above here, like that, and then it would break it and the dots would move below, and then it would break down and then the dots would move above. So it works a little bit like a parabolic SAR, but because the inputs on their indicator only showed ATR, I thought, well, it's obviously a multiplier of ATR behind price that they're using. Very, very, very similar, in fact identical pretty much, to the super trend indicator, if anybody's familiar with super trend. I don't think I've got super trend because it's a load of rubbish. But anyway, it's just a moving average, basically, sort of. So I looked at it and I was like, oh, and they were claiming 70% strike rate on it. So I thought, oh, that's good, I'll make that. So I made it yesterday. So I created an EA with it yesterday to basically trade, to basically work the same way. So I'll just show you what it does. So it basically draws dots above. So if you're short, it will draw dots above And this is a multiplier of ATR away from the close of the candle, basically. So you'll see as we move around, it draws these dots, and if we make a new low, the dot will get lower and lower and lower and lower until basically we're not making new lows. Then the dots go horizontal, then it breaks above there, you get out your trade and you flip the other way, basically. You're meant to trade in line with the daily direction, so I draw the daily ATR ones, basically, so you can see which direction you should be trading in. So you only take shorts when we're below that, and you only take longs when we're above that if it's on the other side. So it's a very simple strategy, very similar to super trend. So I basically replicated it, all the rules that they've got for this strategy, which they showed this 70% strike rate on, making loads and loads of money. So I ran it through the optimizer with every possible combination of ATR multiplier for daily and intraday, which is basically what they were saying to do. If the daily is saying it's bearish, you only take shorts. And I used every single combination there, 150 different combinations I've tested. Could get one of them to even be profitable, let alone have a 70% strike rate. So anyway, if you want to buy this, I'll give it to you for $50, 10% of what they're charging. And mine actually auto trades rather than just be an indicator, which means you've got to trade it yourself. So I'll stick that in the market soon if anybody wants it. It doesn't work, but hey, some people just pump out some rubbish, don't they? Anyway, so yeah, that's what that was, just in case you're wondering. Anyway, on to the next. So, obviously none of you saw that because nobody's actually said they've seen that video, but yeah. I'm always interested in everything that anybody pushes out when they say they've found this new amazing strategy. I just like to prove it wrong a lot of the time because, when people, it's one of those, that video is one of those perfect case. So they picked the perfect trend. They're here, it would have made a really good amount of money here. But here, it would have lost twice as much as that. Because 80% of the time, the market ranges. 20% of the time, it trends. So you've got to make a hell of a lot more money in this trend than you will ever make in this range, because 80% of the time, it's going to stay exactly there. But yeah, anyway. But I'm going to fine tune that. I'm going to work on it. I want to make sure it does exactly what it says. And there's loads of examples they give from that video, so I can basically make my indicator look exactly the same as theirs, so I can verify I've got exactly the same settings. And then rather than backtest it manually, which is what they did for an hour, I can stick it in the strategy tester, test 10,000 variations of every possible setting, see if there is one that's profitable. But yeah. Vink, for your ADR indicator, can you put ADR start line? It's the open of the day. Is the ADR? You don't need an ADR start line. It's there. You don't need a line. It's where the market opens. It starts calculating ADR from there. Yeah. So ADR on this is 178. So this line here is 178 pips from the high of the day. This line up there is 178 pips from there. That's got nothing to do with anything whatsoever. ADR is calculated from the high and the low of the current day. Stevie, what you need is a Lambo. Then sell the indicator for $999. Turn your cap sideways. Yeah, boy. Yeah. I have a lot of respect for Daniel Martin at CTI. It's just that I was just quite disappointed by what he pumped out, because I can't make it profitable. Anyway, I'll do some more testing on it. If I do find some profitable settings, then I'll obviously share. But I'm obviously doing it wrong. Which product of yours would you recommend for props? Products have got nothing to do with props. Trader, you're a trader. There's no indicator that's going to make you pass a prop firm, or EA that's going to get you past the prop firm challenge. Doesn't work that way. Right, so let's have a look at where we are FX wise at the moment. But if you want to know which of my products I would recommend, all of them, obviously. I use them all, but I can't pass a prop firm challenge as a position trader. You'd need to use a stop strategy, and you won't be able to. Well, you might make it through the evaluation, but with prop firms, they are set up to make sure that you blow the account at some point, because the market is not going to let you get away without a losing streak at some point in your trading week, month, day, whatever. Yeah, at some point you're going to get 10 or 15 trades on the trot which are all going to lose, because the market doesn't go win, loss, win, loss, win, loss. It goes over the next period of a year. I might give you back 10, 15%, 20%, 30%, whatever it is, but it's not going to give it to you on a win, loss, win, loss, win, loss basis. When you get those 10 losers in a row, you're going to hit your target for losses and they're going to blow your account. So the answer to the question is, I guess, where's the market reversal alert indicator gone? No. Market reversal alerts indicator. Yeah. So you take that short, take the retest short, get out down there. But at some point, 10 or 15 of those are going to fail in the row. And if you're risking 1%, you're going to blow the account. Or just use a moving average, and every time it gets into here, go short and put a stop up there. But at some point, 10 of them are going to go wrong. Same as any strategy out there, which is why everybody's system hops. I've got a video on it on YouTube. The reason everybody system hops is because they buy a system or a strategy or an indicator, and it works for a little bit, and then it stops working for 10 trades on the trot, and everyone goes, oh, it's actually a load of crap. I'll go and buy another one. There's nothing wrong with the system, it's just had 10 losers. The next 25 winners, you're going to miss them because you've given up, because you had a couple of losers. Everyone's looking for that strategy that gives them, and that's why I looked at that thing from that video yesterday, because it had a 70% strike rate. I've never found a system or strategy with a 70% strike rate. I've been doing this for nearly 14 years now. I've seen a lot of systems and strategies that promise a 50, 70, 100% strike rate. And yeah, it might have a 70% strike rate, but the day that I actually start to trade with that system, it loses 5 times on the row, and I give up and go on to the next. That's what we do, isn't it? Because there is no such thing as that holy grail. And if that strategy was 70% strike rate, do you think I'd pay $499 for it? No, I'd give him $400,000 for it, because I could make millions out of it. If it had a 70% strike rate consistently, I'd snap your arm off. It just doesn't happen, unfortunately. Best traders in the world have got a strike rate between 30 to 50%. But the difference is they can hack losing. That's the big thing, isn't it? Anyway, we digress. So ADRs today. Obviously, there's nothing on the weeklies. What's the date? 20th. So monthlies, obviously, all these extensions are mainly based off of the yen movements, but there's a lot of other monthlies in there. Most of these are all played out, so I'm not going to go through these, but nothing on the weekly. Obviously, it's Monday. There's nothing on ADR today. We haven't had an awful lot of volatility so far today, and possibly not going to get a massive amount. You can tell what's going to happen really with the indices, but there's not an awful lot happening. So any ADRs today, if we do get any ADR hits today, they'll probably be fairly decent ones to take, because I think it will probably take quite a long time to get there, and then it will probably fade. So not really anything to look at on ADRs at the moment. Hourlies, there's very little. We got a CAD yen hit there on the hourly, but Swiss yen, sorry. I'm just going to say that's not a hit. Nicely extended on the hourly. We are already massively extended, but you know, this one, do you want to get in the way of this at the moment? Probably not. We had that massive Swiss franc movement based off of the rate increase, which was completely unexpected out of the blue and took the market by complete shock. And then we had the news of the yen come out from Kuroda on Friday, and the yen completely tanked. Therefore, Swiss yen was the most powerful thing towards the end of last week. I do not want to get in front of that at the moment, so not really one that we want to take. And then on the 4 hour, there's a few things lit up. We'll have a look through, but we'll have a look through all the pairs anyway. I can't say your name. I believe it's VJ, isn't it? Dig VJ. Risk reward is the key. Yeah, it is to a certain extent, but again, you can't. People completely misinterpret risk reward. Just because you have a 2-to-1 risk reward, or 2-to-1 rather, risk reward on a trade, doesn't mean you're going to be profitable. Yeah, if you take all these 2-to-1 risk reward trades, and that is not achievable because where you've put your reward is an obvious place, is behind an obvious place of support, you're never going to hit that, are you? So yes, risk reward is important, but the most important thing is to make profit. So I can make profit with a 0.25 to 1 risk reward ratio. Yeah, very easily. I'm only going to make small amounts of money at a time, but that's not going to buy me the Lambo that everybody is being promised, is it? Yeah. I've got a negative risk reward here. Awful risk reward. Yeah, I've managed to bank 0.7% on a 40k account. Last week without doing anything. Haven't got a positive risk reward on any of these trades at all. They all went into drawdown by way more than I actually banked on them, but I banked money. That's what I'm interested in, not having a positive risk reward ratio. You probably haven't done the Boocamp. Go and watch the Boocamp, and might be some light bulbs in there. Expectancy is the key. Yeah. It's more important that you understand how the market works and what the market does as to planning a trade or getting in a trade with a positive risk reward ratio when a button or an alert pings or an arrow pops up on your screen. None of that has got anything to do with anything. If you get a reversal alert on the 5-minute chart as we got this morning, is that a good trade? If you wanted to get out down there, yeah. If that was your target, it's not a bad trade. 1.5 to 1 probably. Yeah. Should you be taking that if your target isn't there? I would probably say no, because what we're expecting Swiss yen to do, probably about 3 to 5 ADR in the next week to the upside, because the Swiss franc is massively strong, the yen is hugely weak. Do you want to be taking shorts? No. You know, this is the whole problem with everybody's trading, mine included, is you can't take every signal, and that's what we're all looking for, isn't it? We're looking for this indicator that does that and is right 70% of the time. That's a really bad 7, which it doesn't exist. Anyway, next. Aussies on a Swiss. So looking at, I'm just going to quickly whiz through the 4-hour extensions because there's only 4 of them. But Aussies on a Swiss, really big extension. Swiss franc, we had that massive tank. So the question we've got on at the moment is, are we going to retest this propulsion gap or not? It's not really a propulsion gap, a proper propulsion gap where we've had an accumulation and a push. It's just literally a news. So this is the news gap, really, isn't it? Are we going to test this? Likelihood is, I would say, probably yes. When, I don't know. So we are massively extended at the moment. We got extended off of the news. We looked like we were starting to pull back. We had a bullish engulfing off after this hammer on the 4-hour, and then we got a second leg down. So there's leg 1, there's leg 2 happening now. There is potential for a good push further down on the Aussie Swiss. Next level of real support is down here. So somewhere around this area is where I would look for us to get to. That's probably your best option for the next long on it. I don't really want to get in the way of the Swissy. I want to see what happens with the Swissy this week. It's a higher risk trade taking it now than waiting, but it could well play out. We don't know when it's going to do this, when this profit take move is going to happen. There's an awful lot of people short on this that are holding it, obviously, because as we can see, they haven't taken profit yet because we haven't had a pullback. So it's difficult to see when this is going to go. But we've got a fair bit of bullish price action going in this morning. We've got Aussie dollar news. Well, it's Aussie dollar news. We've got Lowe speaking tomorrow morning and the monetary policy meeting minutes tomorrow morning. So there's a catalyst here for the Aussie dollar to move tomorrow morning. So it's going to really be dependent, I think, on what happens tomorrow morning with this one. If we get a good, strong sort of speech tomorrow morning and we've got good policy in place for the Aussie, we'll probably see some bullish movement, assuming that the Swiss franc is weak. So it's got a good chance of getting there tomorrow on tomorrow's news. Obviously, there is the inverse where we could have loads of negative news and information come out from Lowe tomorrow morning, and obviously the Aussie dollar tanks. We don't know which it's going to be, do we? So you've got that, I think, a really good chance of a fade coming there. So if you're going to get in long here, looking to get out somewhere in here. Alternatively, you've got a second position when we get down to there. So you've got one entry there. This is less than an ADR, less than half an ADR away down to there. So what's that, 75? So it's about 3/4 of an ADR down to there for your second entry. Failing that, obviously you've got other levels coming down. These are from a different pair. Yeah, I mean this is just price could react anywhere in this balance here. So 1, 2, somewhere in there for your third. If we get down to there without a profit take move, obviously we're going to come back very, very, very strong and hard from down there. So Aussie dollar Swiss looks pretty good, but bear in mind you are standing in front of the Swiss franc, which is obviously on a massive mission off the back of the rate announcement. So CAD Swiss, exactly the same thing. It's basically Swiss franc related. We've come back down into all this chop. This is a better pair, in my opinion, to trade because the Canadian dollar is going to continue to be strong based off of oil. So you've got more chance of getting some decent CAD movement at any time, which is going to spring this up. Not quite sure when, obviously. We've got a fairly decent support here off of these highs, which is down at ADR. So it could go from here. Failing that, you can take a second position somewhere down there. Then you're going to run into all this balance down here. which would be a third entry long. So at the moment with my positions, I'm still looking to get into 3 positions, and then I'm going to take a decision as to whether to do aggressive drawdown control or start cutting some losses, because I'm still not 100% sure on this market. It's still very erratic, and as you can see, changing, very changeable at the moment, and it's going to be based off of news, because inflation is running away. The banks are going to have to start stepping in, doing some weird and wonderful things to try and combat this. We don't know when they're going to do that, so this is where the volatility comes in at the moment, on all these rate announcements. So pretty good looking long opportunity there. Again, you're standing in front of a moving train, so it's a slightly higher risk against the Swiss franc at the moment, but equally all this shorting off the back of the news hasn't had any decent profit takes, so we're going to get a pullback, and at the moment, because of the strength of the move, the pullback should be equally as good. So you're looking at a 38, 50, 61.8, so probably somewhere between a 50 to a 61.8. So there's a fair decent amount of movement. If you're going to use a stop, obviously your stop would go under there. If you're going to position trade it, you get in obviously at the levels below. Swiss yen, same thing. I really wouldn't want to stand in front of this at the moment. The yen's weak. I can't see any reason for the yen to strengthen. So continued weakness on the yen. We're back up at that 135 on the US dollar yen as well. So I think continuation on this. I don't really want to take a short on that. And the pound Swiss, same thing. Again, pound. We've got CPI on Wednesday. I don't think we're going to get positive movement out of that, and unlikely retail will give us anything positive as well. And obviously we've got PMIs in the middle. So I just get the feeling inflation is going to be worse than expected, which is going to not be good for the pound. So we are obviously very nice extended. This low is holding really nicely. We are rejecting this level a lot. This 1.18. So good looking opportunity to push, but you want to be up there by Wednesday, because Wednesday we're likely to do that. And obviously any kind of strength coming through on the Swissy today, again, you're going to be dropping. So this is completely counter trend as well. If you look at this, you know, you are catching a falling knife trying to long this with a massively strong Swissy, a massively weak pound, and potentially weak news coming for the pound. Don't really want to take a long on it. Much rather be looking at short opportunities up in the 24.72 zone if we can get up there. So nothing particularly exciting on there. So looking for opportunities at the minute. We'll have a whiz through everything. If anybody's got anything specific they're in at the moment, let me know. Or anything they want to look at. Daily extensions as well. We've got a couple of dailies. Obviously, the Swiss yen is a daily. And we've got the New Zealand dollar Swiss as well, extended on the daily. We just pulled down towards support, didn't hit it. So we're very nicely extended there as well. Daily extensions are much slower to play out, obviously, because it's the daily chart. So you've got a lot more reaction time. This isn't very extended at the moment. We have only just touched it. This could well just bounce straight up into there and just continue to do this and get a little bit more embedded over the next couple of weeks. You see we got in here, for example, around about there with an extension. It came out around there and we didn't get any movement. So this is your indication that you should be getting out of a trade. If we exit the RSI and we haven't gone anywhere yet, likelihood is we're obviously going to dump. So you want to be watching this over the next couple of weeks. There's likelihood we may well stick sideways down here. So again, don't really like that as a long either. Shorter term, yeah, probably we'll get a little bit of a pullback. So on lower time frames, obviously, yeah, lovely little long up to there. But obviously looking at getting out much quicker. So let's whiz through all the FX pairs. I'm going to set up some entries on some stuff if I see anything decent. And I say this, what I'm going to be doing. Where's my VPS gone? There it is. So what I'm going to be doing is obviously just watching exposure. Haven't got any exposure at the moment because I'm not in anything. So plan is to use the 2-pair rule, obviously as usual. So I won't get exposed in one direction on any currency more than twice. So if I'm long US dollar CAD, long the US dollar and short the CAD. If I then go long US dollar Swiss, I've got 2 exposures long on the US dollar. I will not be taking any more US dollar longs. Same as usual, I'm not going to overexpose myself in one direction. What I am happy to do though at the moment is to hedge. So if I see a decent opportunity on pound US dollar, for example, that gets me into a US dollar exposure short, I'll be happy to take that as well. So I'll be happy to hedge myself in here when I get some positions on, just because at the moment I get the feeling the market, now we know what is happening with inflation, we know what is happening with rates, what is being forecast with rates. I think we're probably going to find we're going to go into some fairly decent channels. We've got a lot of currencies which are bearish at the moment, and any bearish currency you're trading against a bearish currency is either going to go into a channel like that or it's going to go into a range. So it doesn't matter if I see a good opportunity long and I've got short exposure on that currency somewhere else, because you're going to get currencies pushing and pulling against each other, meaning that you can get into both directions on a currency. And like pound US dollar, for example, we could get decent news come off the pound, which pushes pound US dollar up, but we also get good information come out on the CAD, which pushes US dollar CAD down. You know, we can get into both directions, and as long as the market is entering positions, taking profit, entering, taking profit, doesn't really matter too much which way we get in. What I don't think we're going to see at the moment, which is what we are used to seeing, is a lot of strength of movement that gets RSI extensions to decent levels. So we, you know, 75s, 80s is where I'm really interested. I think a lot of the time we're going to see just touches on the 70 levels, where we're not quite getting a lot of movement. We're going to spend a lot of time, I think, on most things sitting in between 70-30, which makes it very difficult. So hence getting in line with current trend, using the 24 and the 72 for directional bias, and you know, shorting, but not necessarily waiting for RSIs. If I'm seeing decent levels of support resistance holding, jumping in on those ones. So it's just a case of eyeballing everything basically and thinking, right, this looks good for a short, and as long as I've got decent levels, like here for example, pulling back now on that leg down, you've got an obvious entry there and an obvious entry there and an obvious entry there. So as long as we, you know, as usual, if we go short in there and it's wrong, I'm going to take another one at the 72 area. If that's wrong, I know we're coming up to there. So it's just planning it, but not getting into aggressive. Right, Aussie dollar CAD. So shorts on Aussie dollar CAD based on the fact that we're expecting Canadian dollar to stay strong on oil news, and the Aussie dollar at the moment is very weak to mixed, same as the New Zealand dollar. So looking good for short opportunities. So the 24.72 area we're in right now is good for short opportunities. We've just retested that high, so market structure on here is pretty plain to see at the moment. So we've just pulled back, made a new low up there, but it's very, very tight almost a double top. So potentially we could come up and retest it as a double top. If we get up to there, we should get some decent reaction. So that looks pretty good for a short opportunity at the moment. Let's quickly look at the other Aussies. Aussie Swiss is a little bit too extended. I want to see that pull back. Aussie New Zealand is a long. So this is a good example of a hedge. Aussie New Zealand, Aussie is the bigger economy of the two trading partners. It's obviously in control, as you can see. So Aussie dollar, New Zealand dollar looks really good for a long opportunity now. In fact, I might take a long now on that one. Nicely extended as well. So that looks like a really good long there. Aussie dollar CAD, for Canadian dollar reasons, is a good short. And that's a good example of hedging. So I'm happy to go short on the Aussie there. But on Aussie New Zealand, I want to be going long based on the fact that New Zealand dollar is weaker than the Aussie dollar. Yeah. So if I'm wrong on one of them, I'm going to go into drawdown and take a second position. The one that I'm right on, I'm going to get out, bank that one, and wait for the profit take move on the one that I'm wrong on. So not too worried about going both ways. So Aussie New Zealand actually, that's going to be my first trade, I think. Now have we actually... I don't know if we actually got a reversal alert on that already. Yeah, there's no real entry opportunity on that. So what I'll do, it's more of a 72, isn't it? That one. Let's go 1, 2. So I'm going for M5 entries. So where are we? 42. So I'll trade on this new MT4 install yet. So one long Aussie New Zealand. So basically in long on that, let's look at where we're looking to go. Retest of the highs initially, but we'll see how we go on that one. So getting in long there, Aussie New Zealand, based on being in the 24.72 area. If this continues to push down, I will be getting in, obviously, as we push down on additional reversal alerts to the downside. So the EA will basically take over. So the rules on the EA set up here. What I've got set up on the EA is with trend RSI extension. So basically what that means is it's going to take trades on M5 when the 1 hour RSI is extended. And we are using the 72 moving average also as a filter, and I'm getting in half an ADR apart, basically. So it's got to push down at least half an ADR against me before the next reversal alert. So that's going to get into additional positions for me. So Aussie dollar, New Zealand dollar looks good for longs. Aussie dollar CAD, as I say, this looks good for shorts at the moment. We're pushing up hard at the minute. So are we extended on the hourly? We're not, are we? Might give this one a little bit of room. This could well push up and get an ADR hit today. If we get new highs put in, I just want to see what happens if we get those new highs put in today on that one. No point in shorting it right now while it's pushing quite so hard. But let's go for shorts. Aussie dollar Swiss, not interested in at the moment. Swiss franc's too strong. If you want to take this, obviously, looks good for a move back up into there, but not sure whether or not we're going to get this is a proper accumulation gap, propulsion gap here. So we had an accumulation, where they built up the next short book, pushed back down. So you've got your propulsion gap, it's gone in there. There is a good chance that we're going to get additional sellers adding to those positions in here. So this one may well prove to need another leg down. It all depends what they do with the Swissy this week. Bear in mind, obviously, this is the initial move off the Swissy. The market's now going, right, what are we going to do with this Swiss franc? Are we going to continue to push it short, or is it going to be allowed to pull back? And if so, are we going to profit take? And if we do start profit taking, that will probably happen very, very quickly. But then I'll be looking for sell opportunities up there. So Aussie dollar Swiss looks good for longs if you want to take a counter trend now, but you may well get hit by that. And in that case, you're going to want to get in again somewhere around here, and then your guess is as good as mine in that accumulation where we get a bounce from. Don't know. Aussie dollar yen. Longs. Aussie dollar yen is probably not the best one to take at the moment. I'd much rather be long other things against the yen, like the CAD or the Swiss, or potentially the US dollar. But they're all a little bit extended at the moment off the back of the yen move last week. So this is a good looking long. We've had a lovely 24 bounce, which retested and tried again, but we are just stuck at the moment in an accumulation here. This is an area of balance we were quite happy to trade in previously. It's been rejected a couple of times. We're back there again. So we need to see whether or not we get that break to the upside or the downside. If we come down, we're looking to challenge the 72. We're looking for a bounce down there. If it breaks above the highs, obviously, every chance we're going to put in a new high as we get continued yen weakness. So looking at it on lower time frames, it's a bit difficult to get into at the moment because we're just stuck in basically a 4-day accumulation here at the minute. So got those lows, which were the last lows. So there's your support resistance before we broke down. We're accumulating. So we need to break back above this kind of area, really. And that is going to give you your reversal alert on the 4 hour, which is then off to the upside. So this is really where you would look to start getting in long down here. But it's just a bit of a mess at the minute. So you kind of hit the buy button anywhere you like down here, really. Ideally, you want to wait till we get extended. But you may not get it. It may just go. So Aussie dollar yen is good for longs. But not at the moment for me. I'd much rather be taking other yens. Aussie dollar, US dollar. Shorts. Where we are at the moment is a little bit no man's landy. We got this new low that was put in here, which is a higher low. We've got a higher high got put in there, but ever so slightly. So we're basically range bound at the minute. So you want to be buying up down here and obviously ideally selling somewhere up there. But bias on this one is kind of that to that at the moment. So it's difficult at the minute to really get into this where it is. I'd rather wait for us to either get extended on RSI on the 4 hour or the hourly, just to show that we've got some signs of some strength coming in. So that we can get ready for that next short up into this area here. But I don't want to long this because I think the US dollar is probably going to be more powerful than the Aussie dollar moving forward over the next few weeks. So I'm just looking for an opportunity to really try and get into it. But at the moment where we are, there's just no reason to get in. We just had a reversal and we're retesting long on there, which is basically just an accumulation. So anywhere up here, I'll be very interested in shorting it if we can get up there. The other area I'll be interested in is a retest of this 4 hour reversal alert. If we can get up to there, I'll be interested in that because that's going to be your 72 pullback on fib. So that's a very deep pullback for the next leg down on the fib. So that's where I'm interested in. At the moment, we're just not really anywhere of interest on that one. CAD Swiss, this is an interesting pair now because we've got a long against a long. Swissy obviously dominated everything last week with the rate announcement change. So we pulled back into this accumulation. Ordinary, I'd be looking for longs on this. I think the CAD's going to find it, if the Swissy does continue to now become our new kind of safe haven, and we see money flowing into it and staying into the Swissy, I think we'll probably see continued sort of accumulation, so this sort of movement on it. Where we are now, we're massively extended, and obviously there's a massive target to the upside to aim for, but I don't really want to be long on this at the moment. The CAD, we had slightly negative oil news last week, which is why obviously oil came down, which has brought the CAD into a sort of state of temporary weakness, and we've got a massively strong Swiss franc. So I can see this thing kind of chopping around for a little bit down here, and there's obviously, when you get into an accumulation, there's every chance of the next leg actually being a continuation. So we could just see the RSI pop and then push back down again. So not really sure on this one at the moment. If you want to take it, it's a very, very nicely extended one, obviously. You got a nice area of potential support here for that bounce. So if you get in and you're going for that and it works, brilliant. If you get in and you're going for that and it doesn't work, consider getting in around about ADR again down here. And then again, same as a few of these, we're going to head down to an area of chop where there are multiple levels down here that we could just bounce out of. So it's a very difficult one to trade. So not really interested in the CAD Swiss at the minute. CAD Yen looks like a good looking long. In fact, that's probably the best long at the moment. Kind of missed it. It was Friday Asian session, we got the reversal alert on M15. If you look at it on the hourly, we've got this level of potential support, which is the last sort of peak before that breakout move to the upside, which lasted a good week or so. There's a couple of other levels along the way here which are older, and this is the one we kind of got that reaction from. Obviously the CAD's had a little bit of a weak run off of the news of oil, and we've had obviously the yen suddenly weaken again, so we got that big push last week, but it's not really gone anywhere. So I get the feeling this one might sort of accumulate a little bit around here before we get a new leg, and that'll be caused by oil news on Wednesday. Have we got any other CAD news? Oh yeah, we've got retail sales tomorrow for the CAD, which are expected to be incredibly low. That's a massive drop. It's nearly 2% drop in retail. Yeah, we're getting a lot more positive movement out of that. So I think this is actually not a bad looking long now, because I think we might get some decent CAD movement, and we've got CAD CPI as well on Wednesday. So there's a lot of news coming out on the CAD, and then we've got obviously oil in the afternoon, 3:30 as well. Obviously it's not on here because it's a yellow news, but we've got oil in the afternoon as well. So we've got 2 days of solid CAD movement ahead of us. So I quite like the look of that as well, CAD yen for a long. So it might have gone one of those as well. So where we are at the moment, we've just had that reversal out, haven't we? What I'm going to do actually what I'll do is I will load up. I can't. I've lost my set file. Let me just see what this one's set to do. So that's got no filters on RSI, no filters on higher time frame RSI, no. So this is just a standard support resistance bounce, getting in half an ADR. Yeah. Okay. Right. That's fine. So I'm just going to take longs. So that will get me in on the next reversal alert long. 0.16 long CAD yen. So going long CAD yen as well when that gets a reversal alert. Swiss yen is gone, missed it. I don't really want to try and fade this off the back of the Swissy. I'm not sure whether or not this is going to be sustained strength on the Swissy yet, and if it is, obviously this is just going to accumulate and put another leg in. I'm getting on CAD yen long, so I'm getting on a yen long anyway. But yeah, for the foreseeable, looking for longs basically. Right, euros. Euro odd. We're stuck in an accumulation on this one at the moment. We've got a weak currency and the euro has been weak over the last few weeks. So a week against a week equals an accumulation or a range, which is where we're sitting at the moment. At the minute we are just retesting these highs. I'd be more short than long on the euro. We've got Lagarde speaking a couple of times obviously at the moment this week. So there is potential for her to say something that is going to bolster the market a little bit, but we have got rate announcement changes coming on this. It could happen at any time, but we're expecting it to happen over the next couple of months. So until then, I would be kind of weak to neutral on euro. So I'd be looking more for shorts than longs against anything. Euro odd is probably not the best thing at the moment. If you want to get into this as a short, you've kind of missed it. It was this morning, obviously. We had the reversal alert this morning in Asia. At the moment, we're just playing range bound. We've got a sort of a rising wedge forming at the moment on this one. So very, very difficult to sort of pick an opportunity on it at the minute. Long term, so I would say this is probably not a bad place to get in short if we get continued weakness and we find something to bolster the Aussie. Then we could get a move back down, but that's really where I'll be looking for maximum to the downside at the moment. Obviously this is, you know, the best place to take a trade when you're in a range is at the highs or the lows of the range. Yeah, where are we at the moment? Bang in the middle of it. So it's not a good place to start looking for trades. Euro CAD, however, is a really good looking opportunity. Canadian dollar expected to continue with its strength. We have got this level where we were not interested in going below, this 134-ish level. We've also got this level to the upside where we're not interested in going above, about 137.5. So where we are at the moment is towards the upside. We're tapping nicely into the 72, which is where we got our bounce previously. But we have gone into, obviously, a range on this. The Canadian dollar should be stronger than the euro, assuming nothing happens with Lagarde and rates in the short term. And this is where position trading obviously becomes dangerous at the moment, is because at any point Lagarde can turn around and go, actually, inflation is just getting ridiculous. We decided to move it forward, and we're now going to put the rates up in June, for example. It's expected to be in July next month. But if she suddenly turns around and says, actually, we're going to bring that forward and we're going to pop the rates by 0.75% instead of 0.5, we're going to get a pop on the euro. How strong that will be, how sustained that will be, you can't tell. The other thing we've got affecting the euro at the moment is Ukraine, obviously. So at any point, if the EU turns around and goes, okay, Ukraine, you can come and join the EU, what do you think that's going to do? Russia is going to be hacked off about that. Are they going to then start to target European areas? Does that bring us into a World War III? You know, there's so much that can change this market at the moment. New pandemics. We've got a massive rise in corona. I'm obviously evidence of that at the moment in the UK. So that could make another wave come back with a new variant that we're not quite ready for. There's so much going on, isn't there? So you have to factor in and assume, okay, we're going down. If we're not going down, as usual, plan where we're going. Where are we going next? So we've got obviously this area here. that's where we'll be looking for our next opportunity to get in short. Failing that, this is the previous high that we will come up and retest, which is roughly 1.5 2 ADR away. So entry short, second entry, third entry somewhere up there. If we slam out the top of that, probably want to start doing some aggressive drawdown control and start thinking, right, I'm wrong on this one. But if we get up to there, we are going to be massively embedded. And every time we've got here so far, what we've done is drop. So I'd be looking for short opportunities to enter on that one as well. I think we've just had the reverse alert there. So Euro CAD looks like a nice looking little short. So I'm going to start to build a position on that one. Oops. Five and six. Looking for shorts. Position size 21. We're taking an initial position. Initially, just go for the lows. Somewhere down there. Euro Swiss. Yeah, it would have been lovely to know that they were going to change the rates. Nothing we can do about this one. So Euro Swiss has been a short for an awful long time. After the initial Ukraine retracement, we've done virtually nothing on it. Main reason being the Swiss franc went dead. Our normal movement we were seeing, which is usually stronger Swiss franc than euro, was continuing quite happily until the Ukraine war kicked in. That screwed everything up. The Swiss franc just lost all momentum. Potentially Swiss franc got it back last week. So looking for short opportunities again on this until Lagarde comes out and says something about the European rates. And then obviously we need to adjust. So you can take potentially that long opportunity again here. We've got this low. This would be really the area which would be lovely. Oh, we've hit it. Okay. So yeah, we've hit it. I was going to say this zone between the low closes of those candles and the wicks, we've already touched it. So entry one, you wouldn't have got in it basically, but somewhere around here. At the moment, we are pushing back down again. So potentially Swiss franc strength. If this doesn't hold, I don't know where we would go really on this, apart from obviously these lows. So we are extended down here. As I said, this is a high risk fade. Nice distance, but again, you don't know where within there. We could just fade straight back up into the bottom of this and retest it and straight back out again. So it's a very difficult one to get into at the moment. Counter trend, yeah, you could get in, you could get lucky, and it could just go. Failing that, we could retest and get our W there. Failing that, I think we're coming back down to there. There's nothing but clear sky when we break these lows, so there's no reason why we should stop anywhere in here until we get back down to there. So I don't really want to take a long on this. Obviously my short bias on the euro stands, so if we get up into there, I'm interested in shorting it, but I'm not interested in longing it from down there. Euro pound, again, a very tricky one. We've now got a weak currency against a weak currency with the pound. So we've just put in a big reversal up there. We're being supported at the moment by the moving averages. The pound is incredibly weak. Rate announcement last week, obviously. I don't think we're going to see any continued strength in the pound, and it's very difficult to know what's going to happen with the euro and when things are going to happen with the euro. So this is a really difficult one to get any kind of long-term directional bias on. And as you can see, that's exactly what we've had so far this year. It's just not really got a direction. It's not a bad ADR at the moment. We've got some fairly decent movement on it, and it's moving in both directions. So kind of any RSI extension is kind of playing out, but very short term. We're tightening and contracting. So it's difficult to pick any direction from where we are at the moment. We've broken back down below this recent high off the back of the news spikes. But the euro at the moment, I suspect, is going to be ever so slightly stronger than the pound. So kind of buying down here, which is really alien, buying the euro. But it is stronger than the pound at the moment. But again, as I say, this could change. So missed the opportunity down there to get in at the 24. If we get any kind of push back down into the 72 zone, back down here again, I might be interested in longs because we'll also be buying up this low here. Really good strong level of support. So if we can get somewhere down into there, it would be of interest, but right now it's not. So retesting that kind of low area there. But we'll see. So euro pound, nothing really interesting. Euro yen longs, again, euro is probably not the best thing to be longing against the euro, but as I say, that can flip on a coin at any time. So we've missed it. It's gone. So pullbacks, looking for long opportunities on it, but it could just go into an accumulation. But at the moment, that's what we've got holding. This area here, it's holding very nicely. So any kind of retest back into there, looking for long opportunities. If you can get in, you can get into it long now. Obviously the entry was back there, but it's just in the middle of nowhere, isn't it? Euro New Zealand, again, week against a week at the moment. Accumulating, range bound. So looking to buy up these lows, looking to sell these highs. We're right in the middle. Not really interested in it. Could go either way from there. Euro US dollar shorts. So we've got a little bit of a push up on the euro against the US dollar. It's not quite where I want it to be. This is where I wanted it to be, and obviously didn't do anything last week. So it's not in a bad spot. We've just had a reversal alert on the 4 hour. So we've got a little bit of strength coming through on euro US dollar, but I would like to see it a little bit higher ideally. Come up and retest this area or come back up into this accumulation, into this area of balance here. So this area of balance is basically bouncing off of that resistance. So anywhere in this zone, 150 ADR up to the 72 is where I'm really interested in selling it. So there is there is an argument for getting in on this now. We've had this lovely shooting star put in at resistance. Yeah, this area isn't an area we've not reacted at previously. It's the 24 moving average as well. So we are basically pulling back. So if we look at this on a lower time frame, it's more obvious. So what we're doing at the moment is we're pulling back on this rejection of the highs. Yeah, so we've got 50, 60, 1.8 rejection on Thursday last week, which is pulling back. So potentially that is the move. Obviously there is potential also for it to come back up into those highs up here, into this accumulation. So if you want to get into it short now, you can, but let's just measure it where we are now. So we're 120 ADR. So that's one ADR. So what I would do is get in one entry there, a second entry, an ADR apart, a third entry somewhere in there. By the time we get up into there, I think we'll probably get some movement. But we're waiting for news. We need some US dollar news or some euro news, I think, really to give this one a kickstart. But equally, it could just go. If this double bottom doesn't hold, this is going to collapse at the bottom of this. So where it's going from there, don't know where it's going from there. So yeah, it's got a long way to go to the downside. So it's whether or not you want to get in now or whether you want to wait on it. We just had a reverse alert on M15. I'm tempted by this, but I've been much more tempted up here. So I might wait on that one. In fact, what I might do. One, two, three, four, five, six. Yeah, we're not going to get a short. So I'm only going to get into a short if we push up. What I might do with this one, short orders, set to short orders, long and short, but I'm in a buy. What I'm going to do on this one, lot size 15. I'm going to get an initial on a break of the Asian lows. So if we break the Asian lows today, I'm assuming basically this pullback on the hourly is starting to play out. So this move here, yeah. So if we break this Asian low, I think that's probably a good sign that continuation is happening. Obviously, we got yesterday's low to be worried about as well. We may well go into accumulation today because New York's shut, obviously. So, so yeah, looking to get in. I'll get an initial entry in there. If we push up higher, I'll then get in on the next short reversal alert. If we are going to push up higher, we could well bounce there. But if we get up into there, I'll be getting in shorts up there. So I'm either going to. This is either it. And we're going, and in which case I'm going to get gathered up as we go, or I'll get in a little bit higher up, which gets me a better price. So it's a win-win situation. But I want to be short. Pound odd. Again, this is a really tricky one. It's week against week at the moment. Australian dollar's more likely to power up than the US than the pound is, so I'll be looking for short opportunities on it. The 24.72 zone is obviously really nice as a sell area. We've just had a reversal alert on this one on Thursday, which is holding at the moment up at these highs. But as you can see, it's just kind of bouncing off of these highs and bouncing off of these lows at the moment. So we've not really got any directional bias. At the moment, it's a short. When we get down to here, we could well just be holding in an accumulation. So I like this short, but at the moment the Australian dollar is too weak for any kind of breakout. So it's not really anywhere I'd like to be interested in it. If we can get back up to these highs, yes, I think we'll be interested in shorting it up there. But at the moment, I'm not really interested. So if we can get up above the 72 ever so slightly, I'll be looking for short opportunities, but nothing at the minute on that one. Pound CAD, again, this looks much better. I've got way too much CAD I'm loading up, haven't I? So I'm long CAD there, I'm long CAD there. I can't take any more CAD. This looks good though. Pound CAD short. We're in a nice area here. We've just taken out the liquidity at those highs on the spike of the news. We've got another high to test there, and this area here that I identified previously as being a potential resistance next time we come near it, which is what I was expecting hopefully to get there. We didn't. As another backup. So we've had a reversal on the 4 hour based off of the Canadian dollar weakness. We had strong pound off the back of the rate announcement. But yeah, long term, I think we're down, and somewhere between the 24.72 is exactly where, and the H4 extension on RSI is exactly where we want to start selling from. So this is actually quite a good sell now as well. I can't take this one because I'll be overloaded, but pound CAD short as well. Pound Swiss, 2 extended, looking for shorts. This was the entry. But we didn't know what was happening with the Swissy, and we didn't really know what was happening with the pound at that time. But obviously, yeah, market structure is bearish. So that was your entry. Short, missed it. So wait for a pullback, getting short again. Pound yen, potential longs, nice symmetrical triangle break. Long, but arguably this, as you can see, this is the weakest of when we had the obviously everything running up against the yen. This was the one that got hammered down the most because of the weakness of the pound. This isn't the best long against the yen, probably more like the CAD, which I've taken, or the US dollar, but still looking for longs. So if we get any pullbacks back down into the 24.72, potential long opportunities out of there. But at the moment it's bang in the middle of nowhere and just not really tradable. If you're going to trade this kind of as a range, just popped out the bottom of it there, which is established, you're kind of in the middle of that as well. So it's just not a good opportunity really to get into anything. Pound New Zealand, just a contracting mess. Just don't know with this. It's week against week. It's almost as bad as the pound odd. Well, it's worse than the pound odd. It's got decent range because it's the Pound New Zealand. We always get decent ADR off of Pound New Zealand, always have done. But at the moment it's just a mess. So I'd be looking more short obviously at the minute than long. But where you get in is just unknown at the minute. So we've got little propulsion gap up there. We're tapping down into these lows. Looks like it might be rejecting, so I'd be more interested in getting in short somewhere up in this range. So if we get an ADR hit to the upside on it, be interested in getting short up there, but nothing much. There's no strength on the New Zealand dollar to be able to do anything to push this down, and obviously the other option is we're waiting for the pound to have some bad news, and there's a good option for pound having bad news this week. A couple of good options for pound to have bad news this week, isn't there? We've got CPI, and then we've got manufacturing, and then we've got PMIs, and then we've got retail as well. So all happening starting on Wednesday. I've got no pound exposure on at all. Pound US dollar. I kind of want to get on some pounds short. I guess the pound CAD is the best thing, really, isn't it, at the minute? So pound US dollar, obviously the entry was here previously. We've made the new low, we've pulled up and we've made the new high. So this looks, this is very similar to the euro US dollar, obviously, in price action, except the pound's obviously been weaker, so it's made a new low. Somewhere up in here is where I'd like to be taking it. Whether or not it gets there or not is difficult. Very similar trade to the euro US dollar here. Entry below that low. So if this is the pullback for the next leg down, get gathered in and get out down there. If it isn't, want to be looking at a double top at the 24 or somewhere in this accumulation. So it's very much a similar play to the euro US dollar, which I've just set up in exactly the same way. So I don't really want to get on the pound US dollar the same. I just can't find anything to get in on the pound with at the minute. Pound CAD is kind of the best thing. So that's just over an ADR away, up to there. That's more than ADR, that's nearly 2 ADR. Pound CAD. I'm going to go pound CAD short. Oh, I've got too much CAD on. So I'm long CAD. I'm long CAD. I'm going long CAD again. I can't do it. Yeah, pound CAD. I just can't get into any pound at the moment. There's nothing I can get into on pound. But pound CAD, I'd look to get into shorts on, and pound US dollar, I'd look to get into shorts on. But I'm exposed already twice on the CAD, and I've got euro US dollar, basically the same trade there. So one or the other. New Zealand dollar CAD. Again, looks good for shorts. We're in a very nice spot. I can't get in any more CAD. But that's a really nice looking short opportunity in there. Wait for the next reversal alert on that. We're just retesting these highs. M5. We just had a reversal which is retesting. That's about to get invalidated. So we're touching these highs again. So I think this will probably push up a little bit more this morning, and then potentially get a short opportunity on that. So New Zealand dollar CAD, anytime you want to get in short. So nicely extended on the 4 hour. We've just kind of accumulated. This is where I'd be looking somewhere up here, up at the 72 and up at this sort of area, ideally for the next bounce down. We have made a new low, so the market structure is still looking for that. So it's where we're going to turn for the next leg down is what we're trying to decipher here. We're retesting at the moment this reversal alert, so this is a good zone for shorts. So anyway there, really, for good short opportunity on New Zealand CAD. New Zealand Swiss, gone too far. I want to wait for the Swissy to pull back. Again, if you want to take this as a long, your counter trend. So if fade up into there, we don't know if we're going to get this fade into the Swissy gaps or not. It's either going to happen or it's not. There's your second entry. So get in there, looking to get up into there. Failing that, get a second entry. And we should get a bounce down there to get us back up and fade up into there somewhere. I don't really want to take that myself though, not trading against the Swissy. New Zealand yen, good looking long opportunity. The long was back here. So pullbacks and longs on that one. Again, just any pullback, wait for an M15 alert long or M5 if you want to. But somewhere in this area is where I would look for a bounce. New Zealand US shorts, same sort of thing. These all look the same, don't they? New Zealand US, Euro US, Pound US. So leg down, new low, we're pulling back. Is this enough of a pullback, or are we going to want to do more? So we're looking for shorts at some point. Whether or not this is it, you could put an order under the low for a new breakdown, or potentially we could pull back up into the accumulation before that leg started, somewhere up in here, which is what I'd be more interested in getting into as a short. So it looks very similar to the Pound US and the Euro US. And so I've done that on the Euro US. US dollar CAD. Tricky again, it's a long against a long. We've got two currencies expected to strengthen, although there's no real strong currency at the moment. Inflation is killing everybody, but these are the stronger of the other currencies. So at the moment I'd have a slightly bullish bias on this. We have just tapped into these highs and we're pulling back off of them. So we've got really nice propulsion gaps. We've got an accumulation push there. We've got an accumulation push there off of the news. These haven't been retested yet. So I think we've got a good chance of getting a little bit of a pullback on this. A bit of Canadian dollar strength, which we had this big move up on the weakness last week. I think we've got a good chance of putting back into there. So a short off of there is not necessarily a bad play. But my bias on it is kind of long, so I'd rather wait until we get down into these areas and start looking for longs down here somewhere. But you see how massively extended we got on this one. There's a lot of profit taking to be done. We got a decent move there, straight back down into support and bounce straight off again up into resistance. So right now, difficult to decipher whether this is actually a pullback and we're going to get a deeper move down, or what's going to happen with it. Not really interested in trading at the moment. From a news perspective for the US dollar this week, there's not an awful lot of US dollar news coming out. We got Powell talking a couple of times, but we've had all the news last week for the US dollar, so and previous, so nothing particularly exciting, I don't think, on this one. But if you're going to take a short off of this and looking for some kind of move down into here, just be aware of where you're potentially going if this high doesn't hold. We've pushed up into obviously this area of resistance. It's a big area of balance here where we were happy to trade in for a long time before obviously we pushed up when everything started kicking off with Ukraine. This area here is obviously the obvious resistance. We had an accumulation around there. We had a bit of reaction there as well. So that's really where you're going, and that's an awful long way away from where that double top is. You're talking just about 320 pips, so it's 3 ADR. So if this high doesn't hold, you've potentially got a 3 ADR move against you. So it's a case of I'm right, and if I'm right, I've got a pullback to somewhere. If I'm wrong, I've got potentially 3 to 4 positions going in drawdown for a month. Just, it's not a really good, and we were talking about risk reward. To me, this is what I look as risk reward. If I'm right, I'm going to get a bit of a pullback. If I'm wrong, I'm going into drawdown for ages. Do I want to be taking that risk? No, I don't want to be sitting in drawdown on the wrong side of the US dollar for however long it takes to get up there, which is where I think it's probably going to go. So I'd rather wait for us to get down to here and be in this area where I think we've got a lot more chance of getting some kind of springboard higher than not. So this is a better, for me, risk expectation because I can see, what we're doing with this. Yeah. We're above the 24.72 moving averages. It's bullish. We're on an upward channel. It's bullish. The US dollar is expected to be strong, but then so is the Canadian dollar. Who do you think would win out of these two in a fight? The US dollar. It's bullish. Do I want to be taking a short on something that I've got 3 bullish traits just because it's got a double top? No. That's my logic behind that one. Yeah. I might be totally wrong on it, but for me, I'd much rather be sitting the opposite side of it at the moment, based on where we are and based on how long I'm looking to hold it and what I'm looking to do with it. US dollar Swiss, again, very difficult. Yes, really like this as a long. Was not expecting that, and neither was the market. What is that going to do to the market moving forward with the Swissy? Don't know. There's too many unknowns on this. We've seen, obviously, the market chaos and reaction to that announcement, which we were not expecting. Since that has happened, the market's like, ooh, what are we going to do next? I've got no idea what the Swiss franc is going to do next. So therefore, I can't assume I'm looking for longs based on historicals. We didn't manage to make a new high before this collapsed, but then that was not something that is sort of double top reaction. That was the Swiss franc increasing interest rates unexpectedly. So are we going to bounce there? Probably. If we're not, where are we going? I haven't got a clue, so I don't really want to take a risk on it at the moment. I just want to steer clear as much as I can of the Swissy because I just don't know where it's going. Everything is telling me that we're going to fade this. I just don't know whether we're going to do this first. And if so, you're just getting yourself into drawdown, waiting for the fade. And if that happens, it's proven fundamentally that the Swiss franc is stronger. Therefore, you're in the wrong side of it. So to me, this is kind of a stop loss type trade. Where we are now on low time frames, you are playing the pullback on this move as a long. Reversal alert and retest here. For the fade, stop under the low. If you want to be super aggressive, stop under there. That to me is kind of the play, but I'm not looking to get into those sorts of trades at the moment. But that is what I would be more happy doing rather than getting into a position long on US dollar Swiss with that massive strength coming off the Swissy. It's very difficult to know what it's going to do. US dollar yen, again, hard one. That 135 cap, we've tapped it again. We've got a bit of a weak US dollar at the moment. I don't think that's strength in the yen. No, it's not strength in the yen. I don't think. No, it's nothing today. We're a bit flat today, aren't we? So, but yeah, when we break this 135 level, we don't know where we're going from here. So I'm long on it, but I don't want to be long from a high. I want to be long from a pullback. So if we get a little bit of a pullback down into here, I'd be looking more for long opportunities out of there. The other option you've got on this one is this 135. This is our third knock on the door. If we knock on the door again, I think we'll probably break this. So the other option is to put a pending above the highs, or just take a reversal alert, the next reversal alert long there, assuming that run up is the run up that is going to get us through that level. In fact, that's not a bad play to take. So uh, 2, 4, 6, 8, 9 and 10. Is that right? Hang on a minute. 7 and 8, yeah. So go long. Check the filters are off on this. We do that on M15. So slightly higher time frame on this, because what I think we might get is a push down. So I don't want to get in on M5 and then have to get into a second position. But if we get that break, I think if we get a break of this yesterday's high and we can break last week's high, I think we've got a good chance of running on it, assuming that we're going to continue yen weakness. I just can't see any catalyst for the US dollar to really power up this week. So it's whether or not the market is just going to remain pushing the US dollar. That last week's high, I think we've got a good chance of a breakout long on it. So there you go. So I've got 5 positions potentially going on. I'll be exposed on the US dollar, I'll be exposed on the CAD, I'll be exposed on the Euro, and obviously yours in New Zealand. So yeah, there you go, that's me. That's what I've set up so far. Alan, could you talk us through psychology traits? What is your mindset to be able to keep entering trades after a string of losers? It's very difficult, is the honest answer, which is why I position trade. You're either geared up for it or you're not. With the reason I believe 98%, 95%, 90%, whatever figure you want to put on it, of traders that fail, there's 2 reasons. One is they are looking for the Holy Grail. which doesn't exist, so they're never going to find it. But they think it's out there. Yeah. So you get a system or strategy, it has a losing run, and that's not the Holy Grail. So let's go and find the next one that is the Holy Grail. And that one works for a little bit, a week, a month, a year, a couple of trades, don't know. That doesn't work and you carry on. So that's why most people fail, because they're hunting for something that doesn't exist, and eventually they just give up looking, thinking Indiana Jones. Yeah. Just eventually gives up. You give up. The other reason people fail is because they're just not geared up psychologically for trading. Yeah. Everything in your mind is telling you that this can be done because you see other people doing it, and yet every time you try it you fail because you get stopped out, because the market runs on liquidity. So what it does is it moves from liquidity level to liquidity level, looking for liquidity and it takes that liquidity and then runs off in the other direction with it. So that's why it's very difficult to trade with a stop loss. You will get beaten up over and over and over again if you use a stop loss, because that's what the order is there. You have put an order. When you go, if I go long here, right, let's say this is the low, I'm going to put my stop there, right, and I'm going to go for a profit higher up here. The market knows my liquidity's there, because when it makes a new high, it knows everybody puts their stops there, which is why we're taught, that's what we're taught to do. It knows we're all doing it, therefore it knows the liquidity's there, right? So when you break down and you get stopped out, you get a negative psychological reaction. Our goal as traders is not to get stopped out and to make money. When you see that happening over and over and over again, it's just human nature that you will give up. When you try something lots and lots of times and it doesn't work out, you just give up, basically. So it's the other reason people fail is because they're just not geared up to be traders. As a trader, using hard stops in the market, you have got to accept the fact that you need to find an edge that is going to play out over a period of months and years, and you're going to have losing months and you're going to have losing weeks. It's very hard psychologically for human beings to accept that, because our goal is to make money. When we see ourselves not making money for X period of trades, days, hours, weeks, whatever it may be you're measuring your success over, you give up. So therefore, removing, and this is exactly what I talk about in the bootcamp, removing that psychology from your trading makes you profitable. Because if I hit the buy button here and this goes down, my bias, because this thing's been going up for such a long time, hasn't changed. What has changed is I haven't taken that loss and I've given my trade time to move into my favour. Because we know it does that. That's what the market does, isn't it? It does that all the time. So my psychology is removed from the equation. 90, 95, 98% of people fail because of psychology. It's nothing to do with the system or the strategy. If you've got a system that is proven to have a 70% strike rate, if you're lucky enough, let's make it realistic, 50% strike rate over a period of a year, and the day you pick up that strategy, it has a losing run of 10, you haven't given up because the strike rate has changed. The strike rate's the same on the system, it's 50%. You just happened to come in when it was having a string of losers. What made you give up? Your psychology. You gave up. The system can't give up, can it? The system is a set of mechanical rules that say, if this does that, then do this. If you do that for a year, you will get 50%, because for the last 10 years, that's what's happened. That's what's going to happen this year, probably. But your psychology makes you give up. Remove the stop loss from any system, you remove the psychology from the system, the system will become profitable, because the market will still do this. The market moves from extremes to extremes. This is a bad example because we're just coming out of a squeeze. Yeah, the market moves up, it moves down. People buy, they take profit. They buy, they take profit. They sell, they take profit. They buy, they take profit. They sell, they take profit. They buy and sell and buy and sell and buy and sell, taking profit all the way. They come down. They sell too hard, they have to take a profit. They sell too hard, they have to take a profit. They buy too much, they have to sell it off. As long as the market's doing this, why put a little order in there to get me out of the market when I'm wrong? Why not wait for the next move to start? Because it's coming. We know it's coming, because it doesn't matter how far back in time you go and what time frame you look at. Once people have sold off and built massive positions short, they have to exit those positions to take their profit. When everybody starts buying up, they want to get out. When they've sold too much, they need to get out. As long as time is going on and there is a market in place, there will be a point where something becomes too expensive to buy it anymore and everybody starts selling it, or it becomes too cheap to sell it anymore and everybody starts to buy it. Your job is to get in when you think we're getting to a point, but if you're wrong, just wait for them to do it. There is no psychology needed, because I can see historically, since the 1910s, that's what the market's done. Psychology doesn't come into it. For me, as a position trader, and that's why I do it this way. So and that's what I say in the bootcamp, yeah? The very first video in the bootcamp, I set up the whole thing as, this is what we're going to cover over the next 5 days, or 5 videos. This is why I do it this way. If you don't like it, don't watch the rest of it. Don't waste your time. If you're a successful trader with a stop loss, why are you watching this video? That's basically the premise of the first 10 minutes of the bootcamp. If you're not a successful trader, maybe it's because you will never make it as a successful trader, because your psychology is holding you back and not letting you be a successful trader. Because you just are not built psychologically to handle stops. You're a human being, and every time you lose money, it makes you go crazy and angry and full tilt. If that's the case, remove that bit and see if you can make money without it. Lo and behold, 90% of people that go, wow. Because what happens to their P&L is that. Because there's no losses in there. As long as you're not getting in, like if the market's gone like that, as long as you don't get in with a buy there, it's highly unlikely that is going to continue like that, because everybody sitting in here has made absolute fortune. They're all sitting there rubbing their hands going, oh my God, we've got 25 million on our P&L. When are we going to take profit on it? I don't know. Oh, hang on. Barclays have just dumped a massive short. All right, yeah, we better dump. Oh, hang on, everyone's dumping. Yeah? If you get in here and you're wrong, why get stopped out? We know Barclays are going to dump at some point, because if they don't, they can't make money. But that's what I mean about understanding how the market works, rather than understanding the psychology of a trading system. It doesn't exist, does it? You know, when you're wrong to a point where that says 3.5% and I've got 4 positions on or 5 positions on, I'm like, right, I'm a lot wronger than I thought. I'm temporarily wrong on it. I'm more temporarily wrong on it than I thought I was before. So let's start doing something about this. Let's get rid of that one and let's take half of that off and take a loss using all of this. Totally different approach, but I don't need psychology. The only thing I need to know is what the market does, and as long as the market continues to do what I'm expecting it to do, I will continue to make money. When the market has an unexpected event like the Ukraine war, I get out, because I've no idea what impact that's going to have. I've no idea what's going to happen next. I didn't know whether Russia was going to shoot a missile and accidentally miss the Ukraine and hit Poland and drag the European Union and the UN into the war and World War III start. I didn't know. So I get out the market and I find another way to make money while I'm waiting for everything to calm down. Yeah, but that's nothing to do with psychology of trading. That's just why I stopped doing position trading. Because what I didn't want to do was get stuck in this. Because it's abnormal. The market moves abnormally when there are abnormal conditions. Yeah, when everything is fairly normal, the market will move normally, and by normally I mean banks need to manipulate and make money by pushing price up, pulling price back, pushing price up, pulling price back. As long as that happens, that will continue to happen. That probably doesn't answer your question. What you're looking for is the answer to how do you deal with the psychology of getting stopped out? I don't, because I can't. Some people can. There's people out there, there's really good traders out there. The vast majority of them are scalpers, like I scalp on the indices, yeah? Where you are in, out, very, very fast, taking lots of little losses, but taking lots of little wins. Those little wins are a little bit more than those little losses. But that's really, really hard on you mentally, and I hate it. And so do most people. You have 3 losing days on the trot, 4 losing days on the trot, 5 losing days on the trot, or you have a winner, a loser, a winner, loser, winner, loser, winner, loser, and you break even after a week. It drives you mental. You saw that with the evaluation I was doing, if you're in here. I just got to the point of that evaluation at the end. I was 10 days in or something, and I'd basically been up, down, and I was like, I can't be bothered anymore. It drives me mad. But I'm human, so, you know. But does that answer your question? I don't know. I don't have an answer to that question, which is why I don't trade that way the vast majority of the time. I do scalp still, and I've still got my funded account. I'm still going to scalp it, but I'm trying to concentrate on the US Open because it's better. But that's just another way of making money, and you either can or you can't do that way. And the only way you'll know is when you've done it. So, but yeah, psychology. I'm not a psychologist, and I just, like I say, I don't do well with stops. It's death by 1,000 cuts as far as I'm concerned, and it is for most people. I did make money using stops, but I found I can make a similar amount of money doing this, and the stress level is down here as opposed to up there, because I don't care. I don't care if this goes $200, $300, $400 into drawdown, because all it means is I can get in again and get myself out of the position, rather than having to take 5 losses on the trot, and then my brain is saying you got to get 5 losses back. Nothing is a loser until it's gone into that P&L as a negative. All this is drawdown. And that's the other thing people don't understand about their accounts and their balances and their margins. Yeah, your account is there for one reason and one reason only. If you've got a $10,000 account, yeah, what is that used for? It's used to put positions on the market. It's used to draw down the account while you're waiting for it to go into profit. Yeah. How many trades would you say you take where you take an entry and it does nothing but immediately go in your direction? Very few. Picking the exact entry point where that shift in direction is going to happen is virtually impossible. Most of the time you're wrong. Most of the time you're wrong. So what this is basically a drawdown pot. What people are worried about is using too much of their drawdown pot. It's there to be used. Till this hits 100%, I'm in the game. I don't like it hitting more than 15%. But, you know, that's what it's there for. Aussie New Zealand is doing that. If Aussie New Zealand suddenly starts to do that, that's fine. I'll get in there, and there, and this will go down to 3%, 4% maybe. I don't know. While I'm waiting for that, and I know that'll happen because that's what's happened forever. That's what it does. It's a pot of money to be used, and then when you get these, you just pop them over there for a rainy day. And your rainy day is when you get a squeeze, which is too much to handle. Then you start using this to get rid of it. But if I can be temporarily wrong up to 3 or 4 positions on every trade, and each of these trades lasts 3 or 4 days, and I'm in and out and in and out and in and out with a 0.5% on each of these trades, that will go 2.5% every week. If I can do that every week, I'm making 10% a month. 10% a month is enough to pay your mortgage and all your bills. If you've got liquidity, obviously, if you've got a trading account big enough to do it. But the problem is, and this is why everyone goes wrong, is everybody, and I get this all the time, I've only got a $100 account. Will the EA work on it? No. What are you expecting to make? Well, I want to make $200 a month. So you're looking for a 200% return on a $100 account when the largest traders in the world can make somewhere between 10 to 15% a year. Why do you think you're going to make 200% a month, a week? Just unbelievable, people's expectation. But that's because everybody says you can start with a 100 count and you can compound it up to 10,000 and then you off blah, blah, blah. It doesn't work. Because your psychology holds you back. Because you can't hold it long enough and you can't compound it long enough without getting a losing run. You're going to get a losing run. I'm going to go into a squeeze at some point in the next couple of months. And one of these is going to hit something like 5%. I know it, because it happens all the time. It happens to me 3 or 4 times a year. But I'm expecting it to come. And that is my equivalent of having a losing run of 10 trades on the trot. Is getting a squeeze where I've got 7 or 8 positions, all in negative. Yeah. in. Oh my God. Out. Done. Didn't make any money on it. Did I lose any money on it? No. But I made money on all the other trades, so it doesn't matter. Okay, there's the bootcamp. There's a quick overview of the bootcamp. Anyway, I'll let you get on. So, yeah, positions on. A few positions on. A couple on at the moment. And obviously got all these pendings sitting there waiting to go. So, basically, just going to be playing these by ear. I've set up 10... sort of initial rough TPs on them. If you've been in the bootcamp in the live rooms for any amount of time, you'll know there's no way I'm going to hold it up to there unless it hits there overnight. I'll be out somewhere around here probably. Yeah, initial TP somewhere up there. So yeah, looking for a decent move up on that one. If it pulls back down again, be looking to get in. This is the worrying area down here. And as I say, this for me would be a sort of a squeeze down to there. And if we get down to there without having a profit take move that gets me out of the position, we are massively extended and we're going to get that elastic band, spring back. But initially it looks good. So, but I will be looking, this is what my job is to look at this every few hours and go, have I got anything I want to bank? Yeah, bank it. Stick it in here. Right, I'll let you get on. I'll be back tomorrow morning, same time, 7:50. Anything you need, I'll be in the Telegram group. There's no news, as I say, today. We've got very little liquidity by the looks of things. Yeah, we've not gone anywhere. So DAX, basically, we've just returned back to the opening range. We had a little bit of a push down for 15 minutes. And since then, we've just pulled back. So it looks like we're going into a bit of a rotation. All the indices, I'd imagine, are doing very much the same. Well, there's a bit of movement on the US. A little bit more movement to the upside on the US. DAX is the only one really that isn't actually having an upside at the moment. All the others seem to be looking like they want to push a little bit. So, but no massive movements. So we'll see what happens throughout the day. But obviously, bear in mind there's no afternoon session. It's a bank holiday in the US, so the stock market there's not going to be a massive amount of trading today going on. So we're light liquidity. So tomorrow really is where we're going to kick in. We'll have all the orders from today in the US, which will all need to be put into the market tomorrow. So we should have a decent amount of movement tomorrow. But a bit of a dull one today, I think, we find. So I should imagine I'll be sitting in a very similar position tomorrow. But if I close anything out, I'll pop it in the Telegram group. Just to let you know I've shut it, or if I've added any more positions on. But you've seen what I'm doing. I've got the EA running on all of these, so if it does push down and we get reversal alerts, I'm going to be getting into additional positions and drawdown anyway. So, all right, have a good one, everyone. I'll be back tomorrow morning 7:50 if you need anything. Otherwise, I'll be in the Telegram group. See you then.